to the jungle. I am Howard Lindzon. You are on Trends with Friends. I am Upper East New York. For anybody with a drone looking to attack, you can find me in and about the 75th Street in Madison Avenue area. Phil, probably near you. Can you hear me?
I can hear you, man. What's up,
But
buddy?
can you hear me? You're awfully low today.
If you open your window and yell outside, "Yo, Phil," really, really loud, and I might be able to hear. Yes, I heard you.
So Phil's in.
I heard you.
Nice drabby color there of a turtleneck. Phil Pearlman. Michael Parekh, I think in Houston. Our deep research. The only guy who really doesn't phone it in every week. Michael Parekh, always ready to talk about everything, because he's got that Goldman Sachs readability, 20 years at Goldman Sachs. So he's ready to go. We're going to talk a lot about AI this week. And then Daniel Attia, dialing in from Melbourne, an old friend who loves the markets, loves writing, loves everything about the markets, really. And his claim to fame, I met him when he was not ghostwriting, I say. How would you say it? You were strategically helping Professor Galloway.
Founding head of research for Prof G Media.
For Prof G Media. So help create a great voice there that I like. Always makes the professor sound smart. And really can frame a point. And he had this great piece that we're going to get into about CoreWeave this week. So before I get started and pass it off to Phil, some housekeeping on Trends with Friends. We have the Hashtag Awards. Pull it up. This is going to be fun. April 30th in New York. We're having a whole week of parties with all our community. We have some great comedians showing up. Francis Ellis, who is fucking hilarious. Harvard guy, works with Barstool, been fired at Barstool, came back to Barstool. Is going to just roast our community, I imagine, at the stand, and other great comedians joining. And then we are celebrating some of the legends in our industry and the fresh faces on Stocktwits. You can go to stocktwits.com/awards. There's a week left in voting. It looks like Nvidia is the stock of the year. It's going to be no matter how many votes we get. And it looks like Vlad, unless there's a late surge from Coinbase employees, looks like Vlad at Robinhood is going to win the Hashtag Legend Award. So anyways, it's going to be a fun night. And hasn't been done. Stocktwits started this FinTwit community, which on Twitter is slowly just decayed into bots, but on Stocktwits, growing faster than ever. Before we get started, anything else, Phil, that I missed?
I think that's good. I think we're good.
Okay.
We're going to get right into CoreWeave. I'll be at the. By the way, I'll be at the Hashtag Awards. Can't wait.
Were you invited, or you just planned to be there?
I'm crashing.
Okay.
I think I might be presenting an award.
Yes.
I think so. So yeah. That should be a lot of fun. But we're going to get into it. We're going to talk about. Let's just go right to Dan. Disco Dan, he told me to call him, and we're just going to talk about CoreWeave. We're going to go right into it. We'll get to the most interesting chart in the world. But the IP market, I mean, I'm just looking at this Newsmax chart. We're not talking about Newsmax now. We'll get to it. But it's a 10-bagger in 2 days. And Howard, you were saying it was owned by the Russian mob or something like that. I don't know. I hope I don't get whacked for saying that. But anyway, let's talk about CoreWeave. So, Dan, you wrote this great piece just very recently on Renaissance Capitalist on Beehive. You should definitely subscribe there. But why don't you just tell us, what's your thesis here, and why are you putting this out?
So, I deal with a lot of investors. I'm a venture investor. I build companies and all the rest of it. And a hedge fund, I thought about allocating some cash into what was a hot deal, this thing CoreWeave. And I was almost going to blindly do it, but the fund was going to take a big position. And so I thought, hold on a second, let me actually dive in. And once I got a whiff of it, I realized this is not fit for public markets, period. And it just got worse, right? And I went Hindenburg research style deep on it and discovered that even the guys that CrowdStrike are celebrating on LinkedIn for keeping us secure is like some high school kid that played lacrosse and went straight from that to making sure that Microsoft's data was secure. So you need like a PhD in finance to get through this S1. It's atrocious. It's crazy. Magnetar has completely like rigged this deck every which way you could imagine. Whether it's on the equity upside, bang, we're just we can buy 5%. We can buy stock at the IPO price. If it collapses, which they actually are incented to do at certain points, pull it out. They've collateralized the GPUs, rip the guts out of the company, bang. Anyway, the guys that are the equity holders in this are just refugees. You may as well be in Gaza. Okay, like this is like you may.
What's
as
great
well.
is it means nothing about what the stock's going to do tomorrow. I listened to Gavin Baker.
Not stock advice.
Yeah, this one is not stock advice because we were just talking about it before the show, and I was thinking about buying it yesterday. I've passed on this thing since. Unfortunately, maybe I would have made money or I would have been locked up. I don't know. But the SL team is friends with. The sad thing is how small this industry is. I was getting pitched this early, and by friends of mine, and I said, "Are we friends, people? Like, why are you pitching me this? Like, this? What does this have to do with anything that I do? Why can't I just go buy Nvidia or the SMH? I'm not saying you're smart." But why am I seeing this fucking thing? And that's immediately like, listen, I don't make money. I pass on interesting ideas like this. Maybe I'd be up 4 or 5 times my money right now on paper, but like I can't. The stench of this in like the B round when I was looking at this was like, okay, if everything goes right, I'll make 4 times my money. And I'll be rushing to sell the minute I could sell, screaming at the clearing firms. All right, so Magnetar's got upside guarantee and ways to leverage upside, and if it collapses, they also have. So they've done this before. They know what they're doing.
And also, like you said, everyone rushing for the door. Traditional IPO buyers, I don't know if you've heard of them, Fidelity and BlackRock are the only 2 people that Goldman, JP Morgan, and Morgan Stanley aren't calling because they already were shareholders, but they figured out they were on the Magnetar Death Star and dumped 1.3 billion in secondaries before the IPO. And they're not the only ones. The founders also dumped $500 million before it IPO'd.
Right.
We need a Margot Robbie Big Short version description of this deal in the bathtub sequel. The Big Short movie.
I've got just the girl for it as well.
Well, nice. We could just AI the girl. But Mike, you've seen the 1,000 as you did all the internet 1.0 IPOs. What should people be looking out for? Because I saw Gavin Baker, he gave an eloquent. He didn't tear it apart. He said, "Listen, if you want to own GPUs and yada yada yada, and this next launch goes well," and then I swear to God, somehow because I was only listening to the Gavin part, trying to find where Gavin was speaking because he's a genius, and so I think he was just being polite. And maybe no one asked each other, do they own the thing about the all-in that's just fucking so maddening. No one asked each other if they own shares in this thing. So I assume if I was asked to own shares in this, that the fucking numbnuts at the all-in podcast own shares in this. Okay. Especially since none of them, like the 4 of us, are asking each other, do you own shares in this? And none of them owned up to it. And I heard Gavin. Listen, I wouldn't get in front of Gavin. Like, Gavin's a smart guy, but like he sounded like he had shares. Secondly, because he's friends with Nvidia too, and God bless. But someone should ask him the question. And then secondly, I swear to God, before when Naval goes, well, this is a good company. Okay, why do you say it's a good? You don't know anything about this company, right? And if you want to know something about this company and the history of it, go read Daniel went through the S1. And went through the history of this business. Michael, why does this is old Wall Street doing its thing, the financial leverage version of Wall Street? Is this a last hurrah? It's kind of like Trump 2.0. Like, why does it need to get done?
we see this in every tech wave where, where the A-tier people, the AAA players always, sometimes they get, their hands dirty in the muck, and you see these kinds of transactions. The core trend, I mean, look, this is the best of the best names, all strategically placed, right? Nvidia owns a few percentage of this thing. They backstopped it. OpenAI, there's a big deal. Microsoft was the original client. They're over 50% of the revenues of this thing. But but as Daniel said, you got to read the S1 to understand how this thing is being tiered, and basically it's a Rubik's cube of all of these arrangements, and in this case, the Magnetar people, as I think Daniel just points out, cold, the history of these folks, they're smart people, and by the way, they, you may argue with some of the issues in terms of how cleverly this was structured for their benefit, but this is genius.
It's a structured product.
It's a structured product. The probability curves. That's why there's a marketplace, right? So, to your point, buyer beware. The weighing machine basically figures out and understands, and so on. But if I have to compare this against Newsmax, which we're going to talk about, there's a spectrum of structured products, and this is on this side. The only thing I'll say on this one is, regardless of what probability you want to put on the success of CoreWeave, the underlying trend is there in terms of the building of GPUs and data centers, and these guys are, from a, regardless of how they got there, they have built themselves into the first position on the neoclouds in terms of the biggest builder of the data centers. They're
not first. They're not first.
No, I meant in terms of I didn't mean first. Yeah, it's a very crowded space. You're right, Daniel. There's a whole bunch of players there, but I meant in terms of scale and size, right? You've got Amazon, Azure, Microsoft Azure. You've got Google Cloud and Oracle Cloud, and then it's CoreWeave, and then you've got everybody around underneath them. That's what I was referring to on the NeoCloud piece, Lambda and all these other guys. So, and there's dozens and hundreds around the world. And that tier of the business is tough because you got to structure debt, because we're talking ungodly amounts of equipment and energy and so on that has to be financed, and that's why you've got. Magnetar, as much as we talk about their history, in this case, this time around, in this version of the movie, they're allied and partnered with Blackstone. This is structured tier debt products. And by the way, going back to the internet curve, which was my first big movie, the telecom industry raised $1 trillion, mostly on debt, to build the backbone of the internet.
Yeah.
And a lot of that stuff did not have happy ending. But the fiber that we built basically allowed us to have Netflix a decade later, and YouTube.
Yep.
So you got to separate the financial shenanigans from the secular technology story as well.
Yeah, they did a good job of selling a story on top of a secular trend, and it's Franken-Cube. And I think it's great that Daniel on a public beehive can run through this, and Michael, who's taken so many companies public, can explain it in that way. It's not a buyer. This is truly not a buy or sell recommendation, because this could go to 200 or 0 to more. I really don't know, but it is. They created a product for the degenerate economy to ride along with this trend, and it doesn't matter what Daniel writes or what you say, Michael.
Yeah, I agree.
No, I do take issue with Chamath, because he said it's a good company. What the fuck does that even mean? Okay, you can't build a good company in 4 years and just say that's a good company. And in Gavin's defense, he tried to explain the secular trend and where the product fits in. So I can't go as deep as that, nor would I go listen to it. But go ahead, Michael.
No, I'll just say, look, this S1 and this story and what Daniel's talking about, absolutely everyone should pay attention to and read, understand. But and in prior tech curves, yeah, this would be a Hindenburg level discussion, right? Potentially, in terms of the analysis of it. But at the same time, in the last 2 or 3 years, 5 years, I can't unsee what's happened with Tesla, as an example, in terms of where it's gone from. In 10 years, the thing was up to $1.4 trillion of market cap, bigger than all the. No, it does, in the sense that it was also a structured product, Daniel. The thing was
but it's a real company that makes real things. And this is basically an overpaid broker.
Well, this company makes real things in terms of these bloody complex data centers. I've been to the sites. They're creating extraordinary things to in terms of
the clusters. You mean the clusters that they're putting together?
Yeah, that's hard, complex stuff.
Yeah.
Just
so
like,
yes, so it may. Here's the thing: it may become a great company. Weights and the W&B acquisition, we use them at True 3D. That is a phenomenal business, okay, and that could be valuable. All of that could be true, but it is still a terrible, terrible investment if you're not in the debt stack. For very, very simple reasons.
That's
okay,
exactly, yeah.
Like the debt can. Okay, FT was like, these guys, typically they tripped on the debt covenants already. They have no idea what's going on in their books. It's a material weakness. Like, how the hell does this get past, JP Morgan's underwriting committee? I'll tell you how, because they want to get paid back on their debt. And Papa Schwartz at Blackstone, who also owns a stake in Magneta Capital, needs to get paid. Okay. And the thing is, you just do not have a ride on this in the same way as them. And the incentive, even if it could be a great company, the incentive structure is so different.
Correct.
Because you've got hedge funds masquerading as venture fund managers. Mind you, CoreWeave, a loss-making, capital-intensive business, raising capital on the brink, is an LP in Magneta Capital's AI fund that's newly launched.
And the people.
And OpenAI. So the money is just
and they gave a goddamn dowry to Sam Altman to say, please, Nvidia might go away, Microsoft might go away. Please, Sam Altman, please take this heap off me. It's ridiculous. It's insane, and it makes zero sense.
But how does the SEC,
from the equity standpoint?
But this gets blessed by somebody to eventually go. How do they rush this through so fast, Mike? Like, you've done a lot of these IPOs in the day. Why? And here's the other thing I question: why now? Obviously, the secular trend, but why into a market that's at its worst quarter relative to the rest of the world? Meaning, it's not about why. They had to go now.
They had to.
Correct.
There was to make the numbers work. Magneta doesn't want to put any more. There is no one else. They probably even knocked on the door in the Middle East a couple of more times.
Mm-hmm.
It gives Magneta the best optionality on the upside and the downside. They could go, if there's a default, they can go grab the GPUs which they've collateralized, literally the core of your business, and it's a debt to equity straight out the gates potentially.
Yeah.
Right?
It's literally like the housing crisis, almost, the stuff they did.
And the core people took out $500 million months ago. I mean,
so we should, Michael, we should walk it back. So back in 2008, Magneta made a killing by pumping up shaky mortgage deals with equity buys, then betting against them with credit default swaps as the housing market cratered. And fast forward to today, this IPO is their new sandbox, and they've rigged it with the same type of cunning. So whether the stock soars or they default, through a web of financial instruments, they win. Debt, warrants, registration rights, prepaid revenue that they can claw back. So
with no lockups.
Booked revenue.
Yeah, no lockup.
Booked revenue that you can claw back that has a guaranteed interest payment. So it's basically halfway between an expensive loan and a put, right? So let's just think about the warrants, right? You've got 12.1 million warrants at 50. So if it moons, all of a sudden, bang, they'll close out. Let's say that if it spikes to 100, these guys will walk away with what? Something like 605 million, right? And then if it goes to 200, 1.8 billion, right? And the registration rights mean that they can
file that right away. They can shelf it right away and do it.
And people need their blessing, right? They need their blessing to sign off on it. It's double. It's the usual post lockup period that binds other investors. You got to kiss the ring at Magnetar, you know. Yeah. Otherwise, you wouldn't become an LP of their fund that they just magically made that is based on your services. Yeah. And they can call in all of these things at once, immediately, cascade the debt, call it all in, default, buy equity. We have the company. If it is a great company and it is the next Amazon, equity holders aren't going to get it. Blackstone
Thank you.
and Magnetar get it.
And that's what I'm saying. The amount of analysis, you can go read your email and what's amazing is Gavin and these guys, they all go on these podcasts. I think because of the views. You know, listen, no one wants to come on a podcast that has 10,000 views. They want to go on a podcast that has 1 million views. But what's so dangerous about this era, and it's one of the trends that I joke about, is like, I love doing this because I'm learning. So we have guests on from around the world that talk about this stuff. Nobody has a guy like Michael, or just, you know, Phil, the psychiatrist for 30 years, and Michael, who ran Goldman's desk. Like, no one wants to listen to like how the sausage is made, and this is all about how the sausage was made. This one won't bring down compute. Like, the good news is this doesn't change the secular trend. This goes away tomorrow. Nvidia blinks, and we set up more compute, and maybe, you know, like you said, Magnetar resells the compute clusters to another company at pennies on the dollar. So it doesn't bring down the economy.
They invested in OpenAI, Howie.
They get OpenAI. Right. So I'd say it doesn't bring down the economy. Like, this is just a cute wink between Magnetar and all the banks. It's like getting the old group back together to say, you know what? These guys with their ETFs and the Ether ETFs,
it's Ocean's 12.
Yeah, it's Ocean's 14. It's like, let's put the boys back together. We'll jam this out. This is better than Trump coin. This is like, if Trump coin can do this, and they don't even know how to do Trump coin, right? They could call this the fucking compute coin, but that would be too easy. They had to go and create this monster of a product. And what's so funny about this is Newsmax, which is like a business, actually a company. We could call it whatever we want, a media company, a disgusting, you know, roll up of hate. And it's a fucking 20 bagger, because you know who makes money on this? The shareholders, the day traders. So it's actually, even though it's stupid, it's a product for retail. This CoreWeave has proved that these guys they don't have a new trick. And it's a good trick that they have. Let's not get it wrong. But Daniel had to go do this. Michael understands it. He's got Gavin confused. He's got Chamath saying it's a good company. They've done their job, right? They've gone, everybody talking about it. The problem is retail doesn't give a fuck. That's the big hilarious thing about this. Stock traded down, even though they jammed this out. And Newsmax, which the people know about, right? Because it's on everybody's radio, or it's on everybody's, you know, whatever health club they go to, it's just blaring. Was there in the open. What I think it also says, and then Phil, you chime in on the psychology of this, is what are we doing? We're talking about all the problems out there. These are the two best products that we have to talk about in the IPO market. And if you look at the IPO ticker, which is like IBD's, the thing's down 25% this year. I mean, the country should be ashamed of itself at this point. You've launched the Trump coin. You've launched the Melania coin this year. You got the S&P, and we'll get to it right now, fellas, had the worst quarter relative to the rest of the world since Reagan. And we're not arguing. We're just like fantasize about how crazy CoreWeave is and Newsmax a mooner. That's the first quarter of this year, which is right on point for like we had Sleepy
on
Joe.
April 1, on April 1st.
So, all right. So, Phil.
So, listen, the reason that we have to have Danny on today is because nobody is really telling this story.
Yeah, and it's right there in the beehive. Yeah.
And this is an incredibly important story. So, for the viewers, right? we have a lot of sophisticated viewers watching this. Howard's been a venture capitalist for a long time. He's got a lot of friends, a lot of people in that community that are very sophisticated. Then there's another group that is smart, interested in the markets, smart human beings, but not a shark going all the way back, doesn't understand the innards of what's really going on underneath the surface here. And so this is a glimpse. You're not going to see this on CNBC. They're going to trot out supporters. They're going to trot out analysts who feign skepticism, but really just roll over the minute anybody with a lot of money says something. And that's what you get in the media. And so this is a peek behind the curtain. It's the same exact thing with Newsmax. It's the same exact thing that the day before the inauguration, you get Melania coin coming out, going to $9. It's probably trading at a few pennies right now. It's nothing personal. This is the way, to Danny's point about Magnetar going all the way back, this is the way these guys make money. This is how the sausage gets made, or what's behind the curtain. I just want to put that out. The only other thing that I would say is that we are entering an era of self-reliance, right?
Everyone so there was this themselves. I call it to everyone for themselves.
Everyone for themselves. There was a sort of a myth for a while in this country that the government had your back, that other people had your back. It's all about community and all that. And that was just like this, I mean, I hate to say it, but it was all just like a story that people were being told. It was always about self-reliance. I mean, look at the Homestead Act going back almost 200 years in this country, right?
Yeah.
Always about self-reliance. That became implicit for a while, and now it's becoming explicit again, where it's like everybody for their own. Our president is going to go out and just try to make money without even just an iota of conscience. And this isn't even a political statement. I'm just talking about reality.
Correct.
And so you as the viewer, maybe not the super hyper VC sophisticated viewer, maybe just the smart person who's an investor, who maybe has a business, you're on your own, guys. Just want to say that.
Okay. You know what though, Phil, like literally hedge funds did not know what I'd uncovered. I have an LP who literally invented structured products out of Deutsche Bank. I had to have him look at this just to confirm what I was thinking. So like, this is like, should we just step through some of the lunacy in this, or do you want to skim through it? You got the CTO that literally said, someone finally figured me out. Right, and that's just that's tip of the iceberg.
It might be a good public service announcement. The reality is, look, this is all out in the open. It's
all in the open. Read
no one has time to read it.
Yeah.
No one has the
well, the way Dan writes, because I'll give people like some insight. Dan is when you go read Professor Galloway, and do yourself a favor. I'm not a fan. I'm a fan of Dan, knowing that he was kind of behind a lot of this. Professor Galloway has a great trick. Like a lot of the great media people have great tricks. I always thought, I write my own stuff. I always thought Galloway wrote his own stuff. Then I meet Dan, and yeah, Galloway can write, but when the people that put this stuff together, the writers. So the way Dan writes this piece that I shared it with everybody is like, okay, he wasn't sure he wanted to write it. No, okay. The better the content, the less people read it. That doesn't mean you shouldn't read it, because the true art of the piece is how he puts the story together. So we can't do it justice on a podcast. It's actually meant to be read. But the most important thing is you can trade this thing. Just trade it knowing, have a plan. Like you can trade anything. You trade Newsmax, you can trade fucking Solana, you can trade fucking Trump coin, you can trade CoreWeave. We're not going to tell you to buy or sell it. We're going to tell you that it's very upsetting that people aren't talking about how this shit was made, because it's really interesting. If this was a conversation on CNBC and they could have it where enough people would see it, or if this was a conversation they have on All In podcast, I'd listen to it. Instead, I got to fast forward to Gavin because I trust Gavin, and then I catch a glimpse of Chamath saying it's a good company, and I'm like, there's nothing in this that says CoreWeave's a good company. Maybe they made some good decisions. And there's nothing in this other than this is a secular trend that some old school guys, Ocean 24, tried to get together, and they've done it. They've launched it. And as Trump said, when they asked him what does he know about his Trump coin, he says, I don't know much other than I launched it. And that's what they did here. They've launched this thing. They don't know where it's going. The only people that know where this is going, or sorry, they don't even, Magna Card does not know where it's going, but they sure do know how to make money, depending on if it goes to orbit or if it falls in the ocean. Magnetar has figured out how to make money on a successful rocket launch or on a failed rocket launch. And that's all you really need to know. And if you're on Magnetar's side, you got a chance. If you're on the public side, trade it at your own risk and management.
Parekh.
Let's move on. Let's move on.
Bill's point is actually you're so on your own here that you've got literally Magnetar's COO and their other team have gone into the company, getting paid 450K salaries plus 450K potential bonuses plus potential 30 mil in
36
stock
million.
That just and they can just walk, and here, that's non-core financing.
Here's the shame of it. There's enough people that listen to this podcast that could get millions of people in front of Daniel's article and take it apart and have a 4-person discussion around it with people that are smarter or different than us. And that's the whole point of learning how to do this. And this is what breaks markets, right? Trust is fleeting. And we just keep, it's like Kerplunk, I was saying, we just keep ripping out trust out of the market. And that's the pisser that
exactly.
I hate.
And that's a great
I
point.
emailed the board of JP Morgan about this to that point.
They don't
because
care.
Capital markets, why would they care? They're offloading their debt and they're being a broker. But Phil and Michael, just so you guys know, like I taught valuations. I did like essentially a pre-PhD before on trading strategies and all the rest of it. I've done all of that stuff. I've worked at the JLMs. I've personally co-invested with one of them with Macquarie Capital. And I'm in a startup where we are devouring compute, and I see compute for equity deals all the time, and I cannot model out any of this stuff. How the hell is anyone else going to?
No, we'll end it with that.
And that's the point.
It's grotesque. It's grotesque. Okay, so let's just move on because we're going to stop at 5 of the hour today regardless.
Okay.
So let's get some of these in. Most interesting chart in the world. Speaking of Newsmax, speaking of CoreWeave, most interesting chart in the world. If we take a 4-year look at the IPO market, so this is like the morning after. Like you go out Saturday night, you drink, you party your ass off, you have the greatest time in the world. You wake up the next morning with a hangover. This is what the IPO market looks like over the last 4 years. And you'll notice conspicuously that the majority of companies that have come public are trading below their IPO price. And it's just reality. Like it's no value judgment. It's just what you have to think about if you're going in on these guys.
And it's even done as a bubble chart.
1,300%.
I think I'll give you my 1 second because we're behind. This is what you get when you have ZERP. Companies were built for an era that does not exist today, right? And then you have the second thing, which is AI. In 2015, or whenever Michael and these guys started investing in AI, and whenever Sam started, and whenever Elon the Brain said, you know what, I got to fund OpenAI, people were doing, like assholes like me were funding things like WAG, right? A dog walking for Uber. Okay, so the world was over here, and the future world was seeing higher interest rate. So you have companies that were built in a ZERP environment that are not ready for a 6% interest rate world. That's what I see here. Now, what I believe is, and I don't love what I see with CoreWeave and Newsmax, but I do love what I see with eToro, which is trying to get public, is the companies that are getting built the last 5 years, 4 years, are going to be much better companies and businesses. Okay, so like that's the top. When Chamath is saying CoreWeave's a good company, guess when that company started? At the absolute peak of shit times to build a company. Everything was SPACs and everything with COVID.
Yeah.
Now if you're starting a company today and want to be an IPO, you're going to have a much different plan of attack than you did in 2015 or 2010 to 2020. So I think that's what I see in this chart. Mike, you're next. You did the most of these IPOs.
Yeah. I would look. The other thing, I love this chart.
Yeah.
I would just say if you take the x-axis and say instead of IPO and that period, I love the period 20 through 23, private companies. If this was a private company, bubbles, okay, we've got over 1,000. You could talk about the ZIP period. We've got over 1,000 unicorns that are populating in the yellow quadrant of this chart. If they were, the private version of this would be also very dramatic with a lot more bubbles, but a lot more bubbles below the line right now, and all of those zombie unicorns have to be yet to be worked through over the next 3 or 4, 5 years, and none of them are going to. Most of them will not see anywhere a pathway to get to the public version of this chart.
Yeah, it's really something. And so let's move on from that because we talked about the IPO market. This chart is eye-opening. You want to think about this if you're going in, like if you're looking at CoreWeave or you're looking at Newsmax and your mouth is watering, and this is the kind of thing. It's a cold. This is the morning after. This is a cold splash of water. This is what the hangover looks like. Just so you're aware, it's a public service. So let's talk about the first quarter. So yesterday, 4:00, end of the first quarter. A post-election year, and we had a poor quarter. It's only one quarter, but it was a poor quarter. The Nasdaq 100's down almost 10%, and interestingly, and this was like the second runner-up for the most interesting chart in the world, the S&P 500 underperformed the rest of the world by the most it has underperformed in 30, 35, 37 years, since 1988. So you just look at this. I mean, we underperform the rest of the world. So you have like Europe outperforming, you have China up on the year, you have all different parts of the globe performing well, and then you have the U.S. that's just getting crushed first quarter.
Yeah. The question here is, this is a spike like in 2000 that led to many years. I mean, the question here is, there's been spikes before and America bounces back. I think that, in 94, 95, in the mid, like mid 90s. So the question is, I think the more of the question is, it happened, what's going to happen next? And I don't have that answer. And the question is it going to be more like the, 2004, 2005, where it took 4 or 5 years, or is it, are we in some new reversal of trend where Europe is, the rest of the world's going to outperform on the most part for the next 10, 20 years? I don't know. Mike, do you have any inkling on that?
I'm glad we actually go back to 1988. It brings people like me into the conversation. Those people don't remember how history basically rhymes. And you look at the world today, where we literally in the last few months we've got from the U.S. being admired and looked up to, and now we're essentially siding with Russia and North Korea on most things, and Hungary. There's a flip, and it's got to be reflected in the markets going forward as well. And I'm not sure that has yet sunk in. I think the markets are still thinking that, hey, this is just transactional, and tariff A will be countered by tariff B. The thing I'm not surprised that you've seen this outperformance outside versus here at a time when, by the way, the recent data just came out this week. Americans are wealthier than ever. The market couldn't be better from an economy point of view. So that's. But the shoes to drop are still ahead when you've got all these tariffs going on like crazy. I worry, for instance, this is not in this data. I worry immensely, for instance, all of the cuts that are being made to education and science, etc. None of the tech waves that I've been involved in over 3 decades would have been possible without the government basically funding everything from the base research that made the internet possible through the COVID vaccines possible. And yet, to the people who've made the gazillions in these 3 decades are dismissive that government is just inefficient. It is not at all. If you want to, yes, there's always efficiencies to be wrung out, but don't do it with a political stance. And the rest of the world is watching right now. The markets are making a political calculation that this will get balanced and it'll get notched down. But history, again, rhyming, Smoot-Hawley showed us that it all started in similar lines, but it unraveled very quickly when it started to really hit people emotionally with no respect. You poke me, I poke you back, and that's the thing, and that is not reflected in all of these markets yet.
Yeah, I mean, I can't say it better than that, Danny.
So, I think if we go back to January, it was almost, the markets felt like my hinge algorithm after a week in Miami. They became very top heavy, right? A lot of silicon as well, right? And the top 10 stocks in the S&P were 800 times larger than the 75th percentile stock. That concentration surpassed even Great Depression era levels, right? Mm-hmm. So the index is 50% more concentrated back then than it was in 2001. So at the same time, it was also, the American capital markets always dominate, but I think it was peaking as a percentage of global capitalization. And even when we see some of these sell-offs, they're actually quite healthy rotations. The money actually ends up going back into the Russell, or it went off to Europe. It's not actually exiting the market.
Equities, yeah.
So they feel like healthy rotations. And I think we're just at the start of, when it comes to the AI secular trends, I think we're just at the beginning. I think it's like 2006 with CDOs, but we're going to get to 2008 with RPOs and collateralized GPUs at exponentials.
Mm-hmm. Which won't bring down the economy, which in a way they're ugly, but the underlying trend, which is AI, which I'm super bullish on as an entrepreneur and an investor. So I feel that way. I don't have, I like I said, I played this game as a kid, Kerplunk. Phil, you probably played it and loved it. And Phil would be the guy that took it very seriously and would spend 10 minutes deciding which stick to pull out so the marbles wouldn't fall down. Do you remember that game, Phil?
Never played that game, bro.
Okay, so Kerplunk was, if you look at it, it was a very simple game. They threw a bunch of marbles on top of sticks, and every kid had a turn to pull out the sticks. And the idea was, I hope the marbles don't fall down on me. It's a very
love the game.
And my thesis here is Trump's just pulled out all the sticks at once, and all the marbles fell down in front of him, and he goes, "I win," which is the opposite of winning, right? And I feel like that's a risky move. Oh, well, just unwind everything that Biden did because that's obvious. And I don't think the economy works that way. So I think the rotation is what we're seeing. At some level, it's healthy because it's like, okay, no one's noticed that Microsoft's down 20% or Google's down 25%. It's not pleasant, but no one's really noticed. And in fact, some people are cheering it on. People are cheering on the fact that their S&P, cheering on Tesla down, but everybody owns it in their index. So some weird phenomenon right now where people are cheering their losses. So I don't think anybody's noticed. And so I don't think we've hit that stage where like, wait a minute, there's real selling going on and I'm losing my nest egg. So what I worry about is that plays into Trump's favor of like, well, I get to tell a story that this was necessary. And so I'm worried, and I think in talking to a bunch of people that work at Stevie Cohen's, and Stevie was public a couple months ago saying, "Oh, this market's weird."
That was a great call, Howard.
Yeah. Stevie Cohen was like, "I don't know, I'll concentrate on the Mets." And anybody I talk to that works at Stevie Cohen's shop is like, "Yeah, we're not listening to earnings calls. We're doing like private credit and we're doing fucking other stuff." And I'm like, "Wait a minute, they're not listening to earnings calls? So wait, I'm the guy that's supposed to listen to earnings calls? That means no one cares. Like everybody thinks everything's full of shit." And I'm saying these are little signals you pick up. And so what I'm saying is be careful. I mean, everybody's told you to be careful. It doesn't mean you can't buy stocks. It doesn't mean you can't go buy CoreWeave. But I think we're in a like show me place with equities. So I think, like you said, Danny, it's like, okay, rotation, not so bad. People aren't complaining. They're actually cheering on fucking demise of companies. Everybody's acting like a one. It's somehow the libtards are supposed to be the whiners, and now all I hear is the Republicans whining. All they do is whine all day. So it's like we've become a nation where like we're pointing fingers and no one's and instead what we're getting is CoreWeave and Newsmax. I think that chart, Phil, has to flip. And I think tougher macro environments will create better IPOs. My worry about IPOs is that will we have a system that like people want to go public, right? And so we need to fix some of those structural issues.
And that's a real issue.
The other thing that I think about is that there's like some Bible verse where it's like, he who has everything will keep getting more, and he who has nothing will get nothing in future. And you just got to zoom out when it comes to AI. And you look back during the PC boom, right? So whether it was Microsoft, Oracle, Dell, all these guys saw CAGRs of 40 to 75%, right? And so I think about this basket of the big five that have, like, what's not going to change in the next 10 years? These like gigantic flywheels that feed proprietary data to these companies, whether it's Meta or X or Google, sitting on a beast. And you could just sit back, pick a basket of these things and forget about it.
You got to have one or two. You can mix and match your portfolios. I've done with the DGen economy. But I also think if AI is coming, it's going to come for GDP, which is healthcare, education. So the Mag 7 aren't so much in there. Nvidia may be in there, but you know, let's be honest, 6% interest rate, what, Mars? Fuck you, Mars. Like, I'm interested in like healthcare, education, because that's where AI is going to come. Like, you can already be a lawyer pretty much if you have if you have a brain. You can already do self-diagnosis using a lot of this stuff with ChatGPT, just as much as good doctor. And then, you know, what you do with it is obviously the hard part. But, you know, education and healthcare are going to, I mean, AI. So let's just flip right into AI, Phil. What's the key topic today?
Yeah, let's do that. Let's talk about, there's really two main things. And Michael, love to hear, and Disco Dan, you as well, love to hear what you have to say about these. First off, Musk buys his own company, basically, right? So XAI buys X, and it looks like he's sort of building this conglomerate, this social AI, maybe hardware conglomerate. Daniel, you created this incredible sort of a visualization of an interesting way to potentially look at what's going on here. And if we can get that up there, there it is. So there's the XAI element, the X element, the infrastructure element, and the hardware element. So I'm going to Disco Dan, I'm going to wait on you, and I'm going to go to Michael first, and then you'll get to you'll get to come in afterwards. But Michael, I just want to hear your impression of what's going on here, if this is accurate, or more generally your impression of the story. Sure. Is it just, eating its own head, or is there something really going on here?
Sure. I mean, I had a post on Musk X merging with XAI, and I just said that was the first step. He's playing his old playbook of taking public and private or private entities together first. But the next logical step here, on Dan's chart, is to fuse this with Tesla, which is a public entity. Both entities are being valued at a premium, to put it generously, right? The XXAI, I'm going to call it, is at $113 billion valuation. He basically kind of used, put his finger there, and then he said, OpenAI is at 300 billion. I want to be slightly less than half. That's my nemesis. So he picked 113. He has friendly investors in both entities. He made them both happy, all of them happy, by cross-trading all of their things. Daniel probably has some thoughts on how that piece was structured. All the investors in X and XAI, all the Ocean's 12 version of those sets of investors who've been with Elon for a very long time. And Tesla is the same thing. The board, etc., everyone's been very friendly. So that's logical. In Tesla, we've already talked about, even down 40% at 800 billion is again, 2x or more the market cap of every auto company in the world. And you can then argue, hey, there's robotaxi anticipation there. There's Optimus robots anticipation there. All of those things have huge
energy business
fundamental. The energy business is it's 10%. I agree. But if I want to talk about the energy business, I have to compare it against BYD, which is the largest auto company in the world, less than 160 billion market cap, biggest auto company in the world today. And they are vertically stacked in terms of batteries, Phil. And we don't have enough data on that, but their margins are going to be higher than the 25% margins on the energy business at Tesla. So yes, there is an energy business, but I'm not going to go get excited about that just by itself. What Tesla is trading on is anticipation on robotaxis in terms of $500 billion. Look at Adam Jonas at Morgan Stanley. And by the way, Morgan Stanley is Elon's biggest banker. You know, in talked earlier conversations about Wing Wing and my former job. Look, you talk about these games that are orchestrated. This is what's going on. Adam Jonas is the #1 analyst for Tesla on that side. You've got Dan Ives, all of these guys. They're and Cathy Wood on the ARC. They're talking about $1 trillion market for robots and for the robotaxis. Those are all 10+ years into the future. I've said, if you want robotaxis, buy Uber. That's the play, or buy Google with Waymo, but it's still going to be underwater. So the point on this chart, yeah, I agree with all of this. And then separately, I've already said Elon is managing Tesla with 2% of his brain right now. He's got Doge on his brain. He's got Starlink. He is literally, there's a great article in the Wall Street Journal. He's literally taking over NASA, $25 billion budget every year. He's putting his crony Pressman as the next director of NASA. He's already got his core guy supervising everything that happens at NASA. They're going to dismantle 10 years of preparation at NASA to go to the moon, build bases on the moon. Moon is only 250,000 miles from here. You can get there and back in a wink. Mars, it takes 3 years to go there, 3 years to come back. Elon literally a few days ago still said with a straight face, yes, we're going to have 1 million people on Mars in 10 years, maybe to 20 years at the outset. It's nonsense. Any scientist has utter nonsense. It took us a better part of a year to get 2 people back who were gone to the space station for just a couple of weeks. It took us almost a year to bring them back onto Earth. It's just, we don't have the technology to do anything close to Mars, but he's using it as a proxy to take over NASA. And what he's doing to NASA is what he's doing in terms of structuring these transactions, SXX AI into Tesla into Tesla, into SpaceX and Starlink. So yeah, this is a structured product. We talked about Magnetar as the entity that created this extraordinary structure, Elon has them beat. This is an extraordinary structure of things.
Yeah, he turned out to be a financial wizard more than he is a technology wizard, I think.
This is structured engineering of our country,
and
restructuring.
People with money in the game are there, wink, wink, to help him structure this. Correct. To get them out too. Remember, he gets himself out, he's going to bring along a lot of people to get them out of orbit. So again, God bless. Know what you own. Tesla's just hard for me to understand what it is at this point. Plus, he has a boss now. He's not reporting to the board; he's reporting to Trump. And I think, I can't believe I'm saying this, but Trump is using him. And he's still on Truth Social, so he gets the benefit of being on Truth Social. He's still got his meme coin. So Trump's the one that's got the most out of this, because Trump's the one that could put him in jail. Like, he can't be president, Elon. And Trump's talking about a 3rd term. And you're dancing around to keep Trump happy is not going to be easy, even for Elon. And I can see the gulag in his future. I mean, Trump, that you can't write that off. Trump?
The Gulag Muscapalago. Hey, listen, we only got 2. We got a hard stop. Disco Dan, last word on this.
Okay, so really this is about this chart is Musk's super app hierarchy of needs, and it's not your drone manufacturer's super app, right? So you've got essentially Tesla adheres to its core principles, transforms bits into atoms. Starlink claims a sovereign sky, and then X is where attention meets intention. And XAI is like the neural network that optimizes everything from content delivery to commerce flows, right? So this is how I think he will So in the piece that I wrote, this foreshadowed the merger. These two had to merge, right? And the other two are sort of these other things that maybe he does, maybe he doesn't at the right time, probably brings him into a Texas stock exchange in the future. But it's less about vertical integration, more about vertical sovereignty, right? And it's not about internet access, sovereign infrastructure for global commerce. It's this would-be super app would be akin to, like, think about it like this. You'll have your delivery infrastructure in Tesla's autonomous fleet running on your connectivity layer in Starlink and your everything app spine in X. And when you get there, you're not just giving Bezos, fresh excuses to fire Blue Origin's phallic fantasies into space. You're actually building like a new network state where sovereignty is measured in terabytes and not territories. I genuinely think that SuperX will garner a lot of that value, confuse a lot of antitrust as to how they snap this together. And the getting up of XAI's data centers prove it. They use SpaceX engineering know-how, Tesla battery packs. It's phenomenal.
So
right?
It becomes one company eventually in your mind, one structured company?
Potentially way down in the future. It just depends how it affects Elon's dilution and ability, right? But so long as the further he can evade the need to snap them all together, he can still get the value. You can partner with Starlink, right? There's going to be a lot of partnerships, right? Sam Altman pioneered the non-profit, and and I'm sure Elon will find the way to get the value and the data out of Tesla and Starlink to sell them all together, because why wouldn't you? There's a lot of synergy, and this is a monster. I think this company will be a giant in the future.
All right. I can't wait to have you back. I can't wait to have you back, Phil. We owe you more time next week. That was awesome. We didn't get to a lot of the AI stuff, but I think you can tell. And CoreWeave's up 15% since we started the show. So at least
the Jiggly is a toy compared. I mean, we're going to talk about the Jiggly cartoons, but it's a toy comparatively to what we're talking about here. So maybe we'll get to that next week.
Boys,
Phil, your energy, man. I love that shit, dude. You are a king, man.
Dude.
Oh my God.
Dude, it's our pleasure. It's our pleasure having you on, brother.
Yeah, good job.
Thanks for joining from down under.
Thanks, guys.
Adios, guys.
See you. Sleep tight.
Keep the tab open.
Michael. All right. Michael, where are you based, Michael?
I'm in Houston. Next time you're here, this was wonderful to meet you. And I love your work, and it's great. And I think you were spot on this. And on Tesla, just to finish, I mean, on a fundamental basis, each one of those businesses are just extraordinarily spongy.
Dude, we are long BYD. I loved what